Welcome to another edition of Cattle Chatter. I'm Susan Littlefield, and I love this statement from Joe this week. It is a plate full of uncertainty, and I don't think you could wrap this up in a more ugly bow than that. There's just a lot of things that are weighing in on this market trade that are going to continue this week into the weekend, and I'm sure early into next week. So to break it all down, as you heard me mention his name, Joe Kooima is joining this week for a little change of pace. He, of course, is also with Kooima Kooima Varilek out of Sioux Center, Iowa. And let's talk about the fact that there's just so much. There's no like guidebook for you guys to use in the world we're in of a cattle market right now.
Yep. Thanks for letting me fill in here. Thanks for having me on today. And yeah, it's very tough to try to navigate through what we have going on here. The last couple of weeks, the open interest in the cattle have they've declined quite a bit. So the funds are just they're not there to support these big sellouts like they were, 6 weeks ago, 4 weeks ago type stuff. So they're just kind of saying, hey, we got some money made, and we're just going to kind of start layering some stuff out of here. And sometimes they need a little bit of, a reason or a piece of news, and sometimes that can just be an outside event. So we have, last week, they had a little bit of ice raids going on, so that was, a little bit of some fear out there. And then you have this geopolitical stuff in Iran. Israel was kind of the final little like, okay, there's our reason. We're just going to start, jumping out of some stuff there. So that's kind of what we're dealing with right now. So it's a part of the marketplace where we all know where, some of the cash is at. We all know, that we're killing 5 to 6% less than a year ago. Show lists are small. They're not fat. They're trying to grab cattle for 2-3 weeks out. At least we're marketing them that way. So it's just a market that's just basically more of a money flow type situation. And that makes it extremely, extremely difficult to navigate throughout that.
So let's rewind a little bit to the happenings of this last week, because you brought it up, and Brad and I talked about it a little bit last week as well. With the immigration and the works that's going on, there's a lot of information right now that's flowing out of Washington, out of the White House, and we've got the Ag Secretary stepping in to say, "Hey, we need the immigrants for agriculture." So I'm sure it's hard from a processor's perspective which direction you're going to see this market go and how they're going to be able to move forward.
Right. Yep. And that continues just to be kind of a cloud hanging over our head. I don't know if we all have a good answer for that necessarily. I mean, they're already looking at 32-hour kill per week anyway. So sometimes it's not enough to keep them all busy. We've heard of some saying, well, we're going to go work somewhere else because we want to stay busy and get paid and whatnot. But time we'll kind of pass with that, and they're not going to continue to have these ongoing raids or anything like that. I think it's more of a gentleman's agreement between the agents and whatnot that we're just after the higher profile type stuff. So give it a few weeks. I think that can calm down. I think we'll probably see some added kill maybe on a Saturday or something like that, just to make things up there. So I don't know if it's going to create a huge backlog necessarily there.
You talked about the soft cash, Joe, that we saw last week in the trade. And obviously, the North is very, very current. Does this softness continue? I mean, obviously, this is, as you and I are recording, this is a Wednesday. We haven't seen any real solid cash movement as of yet. Is it going to be a, hey, we know there's a holiday, we're just going to wait till next week attitude?
Yep. So how I view it, I guess, last week is that that leverage is always a very fine line to have, and I don't think we're losing it by any means, but you have a little bit of a hiccup that we have a little bit softer cash last week, and I would call it just more weaker, just for the fact that we didn't have a whole lot of trades. So some 240 happened. There is a little bit of some 2-3 week out type chatter for some 235 and maybe a little bit better in some cases there. So you're seeing a market just lose a little bit of momentum, but these are huge prices. You should be cashing them in, and hopefully having a couple weeks underneath them just to put some weight on there. But if you get the momentum to be a little bit weaker, unfortunately, the futures market will carry that tune into the next week and say, all right, a couple dollars lower here. Have that mindset unless things change for the following week. But that would be the program that I would be in right now. And the market is telling you that take it. do some negotiation, but we can't do a better job than that. What you have in hand for a bid for 2-3 weeks out, because the futures market's not even close to that price level there.
Well, and you look at the fact that we have a holiday this week, we have a full trading week next, and then we're into another holiday with the 4th of July.
Yep. So definitely, yeah, that makes it tough. That adds to that plate full of uncertainty, especially right now with no trade tomorrow. Have an on-feed report coming out Friday, and then another long weekend. And every time that I look, and search through the headlines of the geopolitical stuff, I don't know which way to look by any means. So if it creates not really a tension, but just okay, we're peaceful talks or not peaceful talks, it's just stagnant. This market really doesn't want to take on too much risk going into almost 2 weekends this week. So
what's your takeaway on consumers? We talked about having a playbook. There's one area that I don't think any of us know what direction it's going to go.
Right. As far as the demand is continues to stay phenomenal. When we had that market rally late last year, kind of into this year, the first quarter, that was based upon how great the demand was. And this last stretch higher is going to be more of a supply push higher on the prices, because we just don't have a whole lot of cattle available. But that demand still stays just remarkable. And I have yet to see a chart to tell me that, okay, if we meet this price, or if boxes go to this price, or if fat cattle cash price goes here, that's going to stall demand. I don't know what it's going to be, but I do know the the market's job, is to find a price high enough to curb demand. And I don't think that's quite there yet.
All right. What's the one thing you want us to keep in mind as we head into this next week of trade?
I think this is a pretty good lesson to have for the producer, that, the market is aware of where cash is at and where boxes are at, but yet it stays at a big discount here. And there is a huge money flow that we still ebb and flow with. The fundamentals right now are kind of taking a back seat. We know the funds are superbly long, and they've been kind of getting out. So it's one of these the commotions that happen in the market from time to time. But so, just be cautious here, because it's not like the market is unaware of where things are. It's just, okay, the funds, if they need to get out of some more, be very cautious that, yes, we could still have a bigger break. The 10% where everybody's kind of talking about is still $22, which seems like a lot, which it is at these price levels, but that can be kind of a norm. And we've done half of that so far with August there. So I would shy away from saying that things are going to be good for the rest of the year, because we just witnessed that it takes a week of uncertainty and boom, we have a big move.
All right. Thanks, Joe, for joining us this week, filling in for Brad.
All right. Thanks for having me.
That's Joe Kooima joining us for another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.